Yo, what's up, guys? Welcome to your channel, Sage Tino Weeks Pay My Bills. All right, so let's get to learn. I have something interesting that I have actually brought to you guys that I want to bring to your attention that can be very, very helpful in your trading, right? So you can just add it to your trading style, right? So this is a simple ICT strategy that you can actually add to your trading, right? So it's a simple strategy that you can use for intraday trading, right? You can start off from 1 hour time frame going down to M15, M5, and M1 for confirmations. You can as well use it maybe from H4, but I prefer to use it mostly from the 1 hour time frame, right? So I'll illustrate it using some of the trades that I've actually taken today in our signal group, right? And I'll show you the entries and how I go to take those trades, right? So let's get straight into it, right? Remember, I said if you don't see the liquidity whenever you're trading, you become the liquidity. So always make sure that you see where liquidity is sitting before you actually get to trade, right? So there's this good setup that we always see in the market that always presents itself almost each and every day in the forex market, where the market creates a high. If they create a high at any instant, right, we know that above every high there is what we call buy stops liquidity. There is liquidity that is above this high. There is a liquidity pool there, right? So if you see a move that comes above this high, right, but this move is going to be a special move where price just comes above with a single candlestick, then the next candlestick doesn't create a new high, but it comes back into the what, into the structure like this, right? This is what you want, right? So the moment you see this type of a setup where price is taking the buy stops liquidity from this high, then we are going to trade. That's the type of a setup that we're going to explain, that I'm going to explain, and how you can actually maximize on such a setup. Very, very simple, right? But in most cases, it's going to come like this, right? You are going to see your price. This is the ideal setup. Price comes, right, creates a high there, right? Above that high there is liquidity, right? Then it comes down, right? Then as it is coming up there, it creates some waves there. Then it comes to break that high, not necessarily breaking, but taking the liquidity there, right? After taking the liquidity, they come back. So when they are coming back, if they start moving backwards before taking this low, we don't consider that setup. We wait for price to come and break this low that is here, not necessarily this one. In most cases, we actually look at this one, which is this one, right? But we can wait for price to just break this one. The moment they break this one, then our setup is going to be valid. They break that, right? The moment they come back into these highs again, we are going to take our setups, right? So the base setups comes at the extremes. We're going to be looking at the extreme order blocks or the extreme supply zones that are high there. Then we're going to take ourselves there, right? Or wait for them to close our imbalances or FVG that will be around this region. The moment they close that, then we take ourselves and we go down. So we just wait for a price to come to those highs, then we're going to take ourselves there and we'll drop with the setup like that. Very, very simple setup, right? So what we're saying that above this high there is liquidity. This is a liquidity pool, a grab, and on this grab we should see one candlestick goes above, the next should come back, or that very candlestick should actually come back into the zone, right? Then if it is a buy setup, this is how it's going to be, right? We are going to create a low, right? After creating a low, price goes up, right? Then in the way to create that, then it will come to take that liquidity. After taking that liquidity, they go back like this, right? The moment they break this high, they break that high. When they're coming back there, we take our buys and up we go. Very simple setup. I don't think there is anything complicated there, right? So we are looking at this low to be broken as of sell trades. Then we'll be looking for this high to be broken as of buy trades, not necessarily this one. Many times with what I've taught from previous videos, we'll actually wait for this key high or low. But the reason, by the reason that our price is taken liquidity, it has taken liquidity, our setup becomes valid. There is no reason for them to actually come back to these lows. No, right? If you do it well with the steps that I'm going to show you, right? So this is the setup. So now we can actually go to the charts and get to learn how that setup comes about and how we can actually get to trade, right? So the first example, maybe I can actually use gold from H1. Then I'll show you the ones that I actually took today. Let me just go on gold. Let's just scroll backwards and find a position where we can actually use. I had marked this one for this very example, right? So I will use this one. Okay, so my price was actually moving down, right? Then at this instant, they created this high, right? We had this high. On the straight line there, all right? Okay, so they had this high that they had in the market, right? So after creating this high, we see our price came back and it took the liquidity of this candle. It moved up and it came back into this one. So that's why we're interested. That's the setup that we want. That's what I was explaining. So they move up, right? The next candlestick rushing back into this one, right? So we want to see how we can actually map that setup and get to trade that setup, right? So what you can do, right? Let me use this replay option that we have here. Okay, so you'll be waiting. What you can actually do, the moment price creates any high in the market, right, you just mark that high and you chill, right? Then you wait for your price to actually go and grab that liquidity. You started on H1, so you can just chill on H1 till they grab that liquidity, right? Then what you're going to do, or what we're going to do, is we are allowed to look at lower time frames, right? So the moment they grab liquidity like this, they grab your liquidity, it's now clear. The liquidity, the buy stops liquidity that were here, it has been grabbed. The moment they do this, you are allowed to move to lower time frames. When I say lower time frames, I mean M15, M5, and M1 for your trade confirmations, so that you can get into the what? Into the trade, right? So we can look at M15 and see the behavior of the market on M15, and we can, all right. So on M15, this is what is actually what? This is what is actually happened, right? So we had our high right there, right? Price came, took that liquidity. Then I said, you mark the last low that they created before taking that liquidity. It happens to be this one, right? So this is the one that we're supposed to mark, right? So after that, our price came back down. They broke this. So the moment they break this, we know that we have valid sell. All we are waiting for the pullbacks, right? So we want to see our price pulling back to the order block, the extreme order block, or closing the imbalances. In this case, with the imbalances here, and currently they have actually been closed, right? So it means that our price can actually start going down because they've closed all the imbalances, right? But for this example, let me just use the what? The order block that is there, right? So this is the order block that we have. You can actually mark that order block. You can actually mark that order block. Okay, let me do this. Let me do this. Okay, we mark that order block, right? But it looks very big, so you can actually go to lower time frames so that you reduce your zone, right? So we can actually limit our zone maybe to this area, to this very order block that we have there. We extend it all the way to the high that we have there, right? Okay, so this is our zone, right? So what we can do here, we can now take our two, right, for a short trade. Then we can map our trade from here. So this is going to be our risk, right? And then whenever you are risking, always make sure that your risk is more than 1:2, right? Or 1:2 plus, right? So if you look on this two, you see that the ratio is 1.56. So the ratio actually has to be 2, meaning 1:2 risk reward ratio. At least it's now 2, right? Like this, right? So this can actually be our target, right? Never trade with the risk reward ratio that is less than this, right? Okay, so this is our trade. So now we are waiting to see how price gets to play in this zone, right? So this is trade. So our price moves into the zone. So the moment they move into the zone, obviously we are expecting our reactions. Okay, they're in the zone. Then look at the reactions. Look at how the setup actually works wonders, right? Currently, I'm using a previous example that we just got on code, but I'll use actual examples of the trades that I have actually taken today so that it makes sense, so that you won't say this guy is just using a history, right? It has to be more practical. Okay, let me do this. I want to extend. So the trade actually took some days consolidating. It actually took some minutes. We are on M5 consolidating before it actually um, went to the target, right? So I always encourage people that if you put your stop loss, let it be, because you have done your setup, your analysis well, proper risk reward ratio. So you just leave your stop loss and your targets there and you chill, right? And you chill. Okay, so this was the setup, this was the trade. I think you have seen how it actually worked well all the way to the what? All the way to the target, right? So I have done my setup from H1, went to F5 for my entry. I got my entry here, then it moved smoothly into my zone, right? So the reasoning is they have taken liquidity from these guys. They've taken the buy stops liquidity, so they have no business to the upside anymore, right? What's left is for them to go to rally to the downside. They've taken liquidity there. They're now looking for some sell stops liquidity, right? So this is the example of what I was explaining, right? This is what I was explaining, right? Okay, so this is what we're going to do, right? I'm going to do another video, right, where I will show you more examples, right, with trades that I've actually taken actually from today and some days ago, right? For example, I'll explain you all this trade that I actually took, right, on that video where I'll do examples of this concept. Euro odd, I will do USD card, I'll also do odd card this trade. It actually floated to something like 80 plus pips. It's still running this one, right? And other trades like with GBP card as well that paid well. Then so many trades that we have, right, that actually worked well, where I applied the very concept, right? So I'll be showing you where I send the signal and the setup, how it actually worked out, right? In case of odd card, this is actually the odd card trade that we are actually in. We're still holding this, expecting more profits. Our targets, they're actually there, right? So we're still holding this trade in the signal group, right? We also have the euro odd one, right? Euro odd one, I took it from H4. Same concept. If you look at the structure, it's just the same as what I was explaining, right? But I will explain them in detail, right? Then we also have the USD card, right? The USD card, this one was sniper entry from this point, right? We took it in the signal group again, right? I think you saw the signals there from the signal group, right? Our targets are low, we're targeting these lows, right? I'll explain them in depth, right? From entry all the way to the targets, why we're expecting price to move to all those targets. So this is one of my ideal setups that I actually use on a daily basis for my intraday trades, right? So you can actually add it to your trading tools or to your trading plan, and you might improve your skill, right? So I'm very grateful for you taking your time to follow this channel, liking it, subscribing. Always be patient. I've had people coming back to me, my guy, why are you now silent? I'm back, right? I'm back.